Let's understand the types of capital assets. Capital assets basically are classified into two categories: short-term capital assets and long-term capital assets. Now, the reason why these assets are classified into short-term and long-term is that the rates of taxes is generally high in case of short-term capital gains and low in case of long-term capital gain. So therefore it becomes very important for us to see whether the capital gains arising from transfer are short-term capital gains or long-term capital gains, and that depends on whether the capital asset is a short-term capital asset or a long-term capital asset. So let's first understand what is the meaning of a short-term capital asset. Capital assets held by an assessee for not more than 36 months immediately preceding the date of transfer. So let's say, for example, I acquire an asset on 1/4/2009. If I continue to own it for more than 36 months, right, then it is a long-term capital asset, right? But if I do not own it for more than 36 months, then it is a short-term capital asset, right? But this general rule is applicable on all capital assets except the one mentioned below, which is this, for which period is 12 months. So in case of these four assets, which I have just pointed out here, if you own it for more than 12 months, it is a long-term capital asset. If you own it for less than 12 months, then it is a short-term capital asset. And what are these four assets? First is equity / preference shares in a company. Second, any listed securities, which will mean your equity shares or preference share or debenture, whatever it can be, if it's listed. Third, units of Unit Trust of India or notified mutual funds. And fourth, zero coupon bonds. So if either of these are held for more than 12 months, then it is a long-term capital asset, else it's a short-term capital asset. And what I discussed now is also clear from the fact that the long-term capital asset is a capital asset which is other than a short-term capital asset. Means what? Means if you own it for more than 36 months, it's a long-term capital asset. In case of these four capital assets, if you own it for more than 12 months, it's a long-term capital asset. Right? Again, just to summarize what we discussed, an asset can be a long-term capital asset or a short-term capital asset. Short-term capital asset, if it is held for not more than 36 months preceding the date of transfer, that's a technical word. Simply speaking, we can say if it is more than 36 months, it's a long-term capital asset. For specified one, if it is more than 12 months, it's a long-term capital asset. Otherwise, it's a short-term capital asset. The reason for bifurcating them between the two is the rates of capital gains tax are more in case of short-term and less in case of long-term. This is a general thing. I mean, in the sense, there can be changes as well. It's not necessary that always, because in some cases, if it is exempt, then it doesn't make a difference.